Assalamu alaikum friends, welcome to SBR revision series for September 2021, and after IAS 20 we are now going to cover IAS 21, the effect of changes of foreign exchange rate. Okay, this we are going to talk in terms of individual financial statements as well as under group accounting. Okay, usually this comes under group accounting in your question number 1 when you're having a foreign subsidiaries and all, right? So that's why this also makes it a very important topic, because group accounting you will definitely get, but whether you will get a foreign subsidiary or not and you have to translate or not, it depends. If you are getting a foreign subsidiary, IAS 21 you have to apply. If you are not getting, then you don't have to apply IAS 21. Okay, but there are but it has come in the past paper, so it's important that you know the format of it and how to translate and all. So let's start with the topics that we are going to cover are functional currency. So under IAS 21, these are some important areas that you can expect questions from. Functional currency. How do you determine functional currency? Very repeated question. I myself got this question on my exam, SBR exam. In fact, the question number 130 marks was full on IAS 21 only. What is the difference between presentation and functional currency? How do you determine functional currency? What should be the functional currency of the subsidiary and all those things? Coming to the translation rules. Okay, this translation rules is for not for a foreign subsidiaries and all, just if you're having an overseas transactions and all, but not necessarily foreign subsidiaries. The third, we are going to cover the foreign subsidiaries and the proformas. There are some set proformas under IAS 21 which you should know. Okay, so let's start with the functional currency. What is functional currency? It is the currency of the primary economic environment where an entity operates. That means wherever your primary economic environment you're operating, that currency is known as your functional currency. Okay, and how do you determine it? There are 5 factors to determine functional currency, but obviously in your textbooks and all, we have primary factors, we have secondary factors, but since this is just a revision, so I have tried to cover some very few points. Okay, it's not possible to cover everything whatever is covered in the textbook, otherwise we will miss out on the purpose of this revision series. Okay, the purpose is to make it very small and understandable, so that in the last few days you can just cover these few things. That's why I couldn't include everything. So factors used to determine functional currencies are: number 1, sales price. You see in which currency the sales price are. Second, you see the receipt. What is the currency of the receipt? Mostly the purchases and the cost. What is the currencies of the purchases and the cost? The competitive forces. And financing. In what currency financing and all takes place? For example, the amount of loan that you are taking to finance everything. So a subsidiary that operates with little autonomy will most likely have the same functional currency as its parents. What does it mean? If the subsidiary does not have the freedom, they are not independent from the parent to run on their own, whatever the functional currency the parent is applying, same will be applied to subsidiary. In that case, you don't have to look for this factor because they don't have autonomy. But if they do have the autonomy, then you have to see this factor listed above. What is the sales price? Mostly what is the sales price in financing, receipt, purchase cost and all. And mostly in the case study only they will give you 60% of the sales prices in this currency, 40% in that currency. Sometimes they will give you 2-3 currencies also to confuse you. Okay, so you have to see, if you see the majority of your sales, your receipt, your financing are in one particular currency, take that as your functional currency. That is your functional currency. But remember, when you're choosing a functional currency, just giving the list answers in this bullet point is not enough. You have to explain. Okay, explanations and all are there in your textbook, or you can see my lectures also, IAS 21 under SBR lecture. Next, there are some rules when you have to translate. Okay, this is an overseas transactions and all, normal overseas transactions. We are not having a subsidiary or anything like that. It could be anything. Okay, it's just your overseas customer. So initially, how do you recognize initial transaction? Translate into a functional currency using the spot and the historic rate. That means the rate that you have to use is historic rate. Okay, then 2 questions you have to ask. If you're settling, if you're not settling. So if you're settling, That means settlement is taking place. Translate the settlement into functional currency using the historic rate. So same as initial transaction, right? No difference. If it's not settled, unsettled, then you have to ask another two questions. Whether the overseas item is monetary item or non-monetary item, because then it's different. The rates that you are going to use differs. If it's monetary, it will be some other rate. If it's not monetary, it will be some other rate. Okay. So if it's monetary, you have to use the closing rate, closing exchange rate. Monetary items like receivable, payable, loans, these are monetary. Either you are going to receive cash, either you have to pay cash, but you're dealing in cash. That's why it's known as monetary. So monetary, you have to use closing rate. To retranslate, because initially you will be using historic rate, but later reporting at the year end, if it's unsettled, then you have to use closing rate. But if it's not monetary, non-monetary, what are the items like property, plant and equipment, inventories? These are known as non-monetary items in your statement of financial position. This you do not retranslate. Remember, non-monetary items do not retranslate. But if held under fair value model, possible, right? Maybe the PPE under IAS 16, you decided to hold it under fair value model. Then the fair value will need to be translated when determined. You have to translate that fair value when the day when you have determined that this is the fair value. You have to translate that fair value. Okay. So this is general rule for translation and all. But mostly this is not likely to come so much because we are more focused on group accounting, which is for overseas subsidiaries. How do you translate? But this is your knowledge from your financial reporting that you should know. Okay. Assume knowledge. Now let us move on to SBR. The most important is foreign subsidiaries. So for foreign subsidiaries, remember you first have to translate before you consolidate. Because if the parent and the subsidiaries functional currencies are different, you cannot consolidate. So that means the subsidiaries, the foreign subsidiaries functional currency first has to be translated to the parent's presentation currency. Okay. That means foreign subsidiaries might be recording it in different currency, in their local currency. You have to translate to the parent's presentation currency. If the parent's presentation currency is dollar and the subsidiary is recording it in pounds, you have to translate into dollar first and then you consolidate. That's the rule. Okay. Now we are coming to item by item. That's general rule we translate. But how do we translate and what rate? Depends on which item we are translating. So for assets and liabilities, that means all the statement of financial position items will be translated using closing rate. Okay. All assets and liabilities. But when we went here, you see, here assets and liabilities, they are separated, whether monetary or non-monetary. Monetary, closing rate. Closing, non-monetary, do not retranslate. But when it comes to foreign subsidiary, everything is easier now. Nothing to separate like monetary or non-monetary. Everything, closing rate of exchange. Because they told all assets and liabilities. Okay, you're translating it into what? The group's presentation currency. Okay. Then, goodwill. See, goodwill is a part of an asset, but it is treated separately from assets and liabilities. Okay. Separately, you have to account for it. It is the asset of the subsidiary. But remember, for goodwill, it's a bit complicated. Why? Because first you have to calculate goodwill using the functional currency of the subsidiary, which is not the parent's presentation currency. You're not translating line by line. How do you calculate goodwill when you have acquired a subsidiary? Fair value of consideration plus NCI minus net fair value of net assets, right? So you are not translating line by line. Consideration to parents currency, NCI to parents currency, net asset to no. Everything you are first calculating in a normal way using the subsidiary's functional currency. You're calculating the goodwill. Later, once you have calculated that goodwill, then only you will translate that goodwill, one figure only, will translate to the parent's presentation currency using the what? Closing rate. Why? Goodwill is an asset. All assets and liabilities closing rate. Okay, and this goodwill will go in the group accounts. Third item is income and expenses. So all the statement of profit and loss item will be translated at the average rate. Okay, that means all income and expenses only goes there, no? So average rate. So now let us summarize what we went through. Assets and liabilities, closing rate. Goodwill, closing rate. Income and expenses, average rate. Okay. Now, so because you are now translating it, you will be having some exchange differences. Usually exchange differences are not so big. It's very small. Small amount. Small amount of exchange differences are there. And this arises on consolidation. Okay. So if any exchange differences arising on consolidation, why? See, when you are foreign subsidiary, you anyway have to consolidate. So to consolidate, you have to translate. So when you are translating it, you are incurring an exchange difference. That exchange difference you have to recognize under other comprehensive income. Remember it. Other comprehensive income. Very important in SBR, which place you are recording and at what time. Initial recognition, subsequent recognition. This is very important for SBR. Any standard you study, it will be asked. Okay, so other comprehensive income. But on disposal of the subsidiary, they will be recycled to statement of profit and loss. Under IAS 1, presentation of financial statements, there was a list that when you are recognizing anything under other comprehensive income, you have to mention whether it will be recycled to profit or loss or not. So this is such an example, which will be reclassified to statement of profit and loss when you are selling the subsidiary off completely. Then whatever that exchange differences you have earlier recognized in comprehensive income will go to profit and loss. Okay, this you don't have to show it, you don't have to calculate or anything like that. But for if a discussion question is asked, for example, they might ask what would happen to the exchange differences, or how do you account for exchange differences if the subsidiary is disposed of, then you have to explain this point that they will be recycled to statement of profit or loss. But for calculation purpose and all, you can just write it will be recognized under other comprehensive income. Exchange differences arises from three things. There's a pro forma for these three things which you have to memorize. First, net asset, opening net asset. When you retranslate the opening net asset, how do you use closing rate? Because assets minus liabilities, and that goes in your statement of financial position. So you translate using what rate? Closing rate. Remember, opening net asset, initially when you translated it, it was opening rate. But later, when you have to retranslate, you are using a closing rate. So the rates are different, opening and closing. Because of that difference only, exchange differences are coming. Okay, second is from the profit. Second exchange difference is coming from the profit. When you retranslate the profit, because profit you are retranslating using average rate. But when you have to put in the statement of financial position as retained earnings, you have to translate using what rate? Closing rate. So statement of profit and loss, you are using average rate. Statement of financial position, you are using closing rate. The two rates are different. That's why exchange difference comes. And the third one, goodwill. When you are translating the goodwill, remember every reporting date you have to retranslate the goodwill using what? Closing date. And every year the closing rate changes. So exchange differences. Now let us go to the pro forma. So for pro forma, for opening net assets and profit, they're together. You don't calculate net assets separately, profit separately. But if you want, you can do that also. But it's time consuming. Better to do it together. Okay, so net asset and profit are together, and for goodwill, it's separate. So this is the pro forma. 3 columns first you have to make. Now since you are doing it on a CB platform, so it's easy. Okay, you don't have to think about taking a ruler and making a straight line and know and how much space should I keep. You don't have to worry about it. You can just press the space bar and keep as much space as you want. Okay, and you don't have to draw any line or something, because you're writing it on a Word, or if you're using an Excel, even better. You can just put it in 3 different columns. One will be in the subsidiaries functional currency. In this case it is DN. Let's assume DN. Then for exchange rate, which rate are you using? Second column. Third column is after you have converted. That is your parents, okay, which is dollar. So first you start with opening net asset in the subsidiaries currency, and you are translating it using what rate? Opening rate. That also you have to write under exchange rate. You don't have to write opening rate, but you have to write that rate, what you have taken. The, the rate, they will give you the figure. That figure you have to put. Let's say the figure is 2. 2 DN is equals to $1. So 2 is the rate. Okay. Whether you multiply or divide depends. That you have to understand. If it's the same currency, okay, divide, different currency, multiply. Okay, that you have to be very careful about it. Sometimes what happens, you are incorrectly multiplying, but you have to divide. So that division and multiplication, be sure of it. Okay. Next, profit and loss for the year. So after net asset only you are putting profit and loss because you are doing it together. So profit and loss, you are using an average rate. Remember, in that net asset, your retained earnings also comes. So that retained earning is a part of a profit and loss only. Okay. So different rate. So profit and loss average rate. Okay. Then closing net asset. This will be given to you. Okay. Closing net asset will be given to you. Why? Because that exchange difference is always the balancing figure. That's why. So closing rate, closing net asset, closing date. And finally the balance. So the balance could be a gain also, it could be a loss also. If your closing rate is more than the opening, that means it's a gain. Otherwise it's a loss. Okay, understood? And you will not have any exchange gain or loss on the functional currency or under DN. No, only for dollar you will have that. Okay, that's why it could be without bracket or with bracket. Without bracket if it's a gain, with bracket if it's a loss. Okay, that is not closing net asset, it would be closing net asset and profit together, right? Then goodwill translation. So goodwill translation, same way how you have done for opening net asset and profit, but here you are putting goodwill. So goodwill opening rate initially, then impairment. If there's any impairment related to goodwill, deduct that impairment. And impairment, since it's an expense, you are translating it using average rate. Then closing goodwill, closing rate. Okay, so because if you see opening goodwill minus impairment loss under dollar, if you calculate, it will not be same as your closing goodwill. There's a difference. That's why there's an exchange difference. Here also it could be a gain or a loss. Okay, so these are some exam kit questions that you can cover for this Aspire, Kerberos, Bubble, and Pursley. Okay, but make sure that today only you go and do these questions because group accounting, so you cannot take a chance. So that's it for IAS 21. We have successfully covered IAS 21. Please learn the Proforma, and just memorizing it and keeping line by line is not enough until you do a question and apply that Proforma in a question to test yourself with whether are you understanding it with numbers. Studying in theory is different, applying it with numbers is different. Trust me on this. Okay, so see you in the next standard, a very short standard, IAS 23, borrowing cost, whether we have to capitalize and what cost we have to capitalize under borrowing cost. Okay, till then, thanks for watching.